Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.
We're talking about the biggest trending themes that are shaping the industry today in decentralized finance with Michael So. He is the co-founder of Okra. Welcome to the show.
Thank you for having me back.
First, I saw you in Dubai a few months ago, then it was Miami. Now we're in Paris, the Paris Blockchain Summit. Huge conference, more than 3,000 attendees. What is the theme or sentiment that you gathered from this conference?
Yeah, 100% institutional. We have seen a lot of folks, mentioning that institutional, especially here in Paris, being a slightly more conservative country, in terms of crypto regulations, they definitely, focus on the institutional side. But at the same time, they all say compliance are coming. Yeah. So that's what we've been hearing.
We're seeing big exchanges like Binance opening up operations in France. So definitely a lot of expansion in Europe. Now let's talk about one of the themes that you've discussed with me offline. Could be the dominant theme in DeFi this year in 2022. So a bit of background, 2 weeks ago, the EU Parliament required KYC, know your customer for all crypto transactions. Give us a little more detail.
That's right. From what we've seen, the European Parliament have passed a law in terms of all crypto transfers, regardless of sizes, requiring KYC, know your customer practices, along with anti-money laundering practices, to be carried out by all players, including DeFi players. So I think that is going to be shaping up to be one of the biggest challenge for the industry. But at the same time, it is something that a lot of folks have already anticipated.
So talk to us about what KYC means from a practical standpoint. Does this change the way people transact Bitcoin or what?
It does. A lot of folks today, especially on smaller transaction sizes, they may not carry out any meaningful KYC just because of the fact that the sizes.
Well, let's back up. What does that mean exactly from a crypto perspective? KYC. How is that conducted?
Many ways. If you were to on-ramp onto the exchanges today, they require that they show proof of for example, your name versus your ID, and just to make sure that the very same person coming on board is the very same person that has been background checked. But on top of that, one of the themes that European Parliament has talked about is the fact that because crypto is very technology advanced, they can actually layer multiple smaller sizes trades together to bundle into a larger size, making the larger size rules that applies to traditional finance KYC a little bit inapplicable. For that reason, they do away with the size and will just simply go ahead with every single transaction size requiring the KYC practices.
Do you think this new regulation will provide hurdles to on-ramping, making the adoption rate slower for at least the retail client side?
In the short run, I believe so. But in the long run, I believe it actually allows a bigger user base to be onboarded on the crypto. That means that everyone will have the same rules to abide by, and at the same time, they will all know and what to expect in terms of how to actually get on-ramp onto the crypto scene.
Yeah, it's affecting the crypto banks too, right? In traditional financial banks, you already have KYC, but I suspect that more of this will happen from the crypto bank side as you start depositing your money with Celsius and Grayscale and BlockFi and other companies. Okay, so permissioned DeFi is the theme of our discussion today. It's on your company logo. What is that?
So our company ourselves, we anticipated this move, from the regulators. So like we said before, permissioned DeFi means that KYC AML will be carried out on DeFi users by the protocol, just like what we just discussed. We have also combined the other two components, which is fund management through index tokens usage, alongside with the execution using DeFi infrastructures and technology.
Okay, you're gonna have to explain what that means.
Absolutely, absolutely. So as you know, DeFi, is smart contract based. Yeah. At the same time, it is also non-custodial. Just to step back a little bit, non-custodial means that DeFi, the protocol itself, does not control the keys to the assets being actually housed and stored within the smart protocol. What it also means is that it actually would require the actual users with the keys to unlock the assets should they want to retrieve those assets outside of the protocol. So that's the non-custodial side. And secondly is the fact that Smart Chain allows multiple transactions to be bundled together into one without having to wait. In traditional finance, there's something that is called overnight risk. And that is exactly what defines credit and the credit risk profile that a lot of folks face. For example, if you were to borrow from the bank even just for 1 week, that 1 week time and the duration of that means that the banks would have to face the non-returning risk, from the clients. And DeFi do away all that stuff by allowing all transactions to be bundled into one. Should one step within the multiple transactions, not to be carried out, the entire chain of transactions can be reversed.
Okay, we're going to talk a little bit about some other technical themes in just a minute. But talk to us about how your execution allows multiple transactions to be bundled. What does bundling mean?
Correct. Yeah. So bundling means two things here. Number one is the fact that by having an index token wrapping the underlying, it allows many things to be collectively stored within a portfolio. And that's the bundling piece. But at the same time, it also means that the underlying being bundled can be achieved, I should say executed, through multiple complicated transactions. One of the products that we have dealt with in the past is something such as a yield-bearing stablecoin index. We would convert, for example, a Bitcoin or a Avalanche token AVAX into 4 different stablecoins, each of them having their own risk profile, such as USDC, Tether, DAI, and Min. Very different stablecoins, backing instruments being very different. At the same time, they share the same denominating currency, which is US dollars. Now, just because the FX risk is the same, being USD, doesn't mean that there's no protocol risk. By diversifying into 4 different stablecoins, we allow investors to manage the downside risk just because the FX is the same. Now the protocol risk can be diversified as well. Now, on top of that, we actually would deposit using the smart contract into different yield-generating facilities, such that they generate actual interest rates through the stablecoin execution. So once you have achieved that, now you have 4 different yield-bearing stablecoins bundled together into portfolio, and that becomes a fixed income portfolio.
Okay. All right, let's talk about some other emerging themes in the crypto space, not just in DeFi, but crypto at large. So let's talk about CBDCs first. Emergence of CBDCs is gaining traction all around the world. When can we see adoption of CBDCs? Actually, before that, when can we see releases of CBDCs in the West and then adoption of it?
Yeah, that's a great question. China spearheaded the CBDC, in multiple cities, within China. Obviously being used already. They literally, borrow one of the concepts, from crypto by airdropping many of the CBDCs, into literally average people's pockets. And by doing that, they also have allowed merchants, to number one, accept the CBDC as a form of payment. But secondly, also make sure that no one denies CBDC as a form of payment. That's actually one of the key regulations, and also government push, to help with the adoption of that. I think in the West, what's happening is
no one denies CBDC. So basically what you're saying is government's forcing them to use it.
Well, it's more like merchants have have to make sure that, just like fiat currency being a bearer instrument,
Yes.
Anyone who bears the note, basically are entitled to the rights of paying the note to transfer and swap for, let's say, a merchandise. Correct. Yeah, absolutely. But at the same time, on the Western front side, I believe technology is already here, but there are many considerations. Because number one, there is the ongoing fiat payment channel that needs to, number one, still continue to be to be used. But secondly, I think the Western governments would also have to consider the fact that many of the rules that apply to current financial institutions, such as, once again, KYC, AML, can balance out with the needs of privacy. I think that front is going to take a little bit of time, but eventually, I think just like the crypto side, KYC, AML being already used, proposed, in the laws, that means that eventually the direction is going towards permission.
Have you done any reading or research on what the price of CBDCs is going to be, I guess, tethered to? Is it basically essentially a stable coin attached to its domestic currency, fiat currency, or is it going to be its own separate entity? Let's say a Fed coin comes out. Is that basically a derivative of USDT, for example, or is the Fed coin price relative to other, I guess, stable coins going to be completely separate from USD?
Not an expert in this field, but from what I understand, just like the Federal Reserve accounting system, I believe CBDC, rather than being a banknote reserve like the way Federal Reserve is, I believe it can actually directly come out from the money supply. meaning like the M1, M2 style, accounting, allows the fact that not the notes would have to be basically the banks do not have to directly have an account with the Fed, but rather the Fed can almost directly issue these CBDCs directly to retail customers,
Yes.
Such that in a way it skips some of the I should say intermediary banks, and at the same time that's exactly going back to our topic before. The consideration to balance out between the commercial interests of the banks versus the direct benefit to the customers is something that's probably needs to take a little bit of time to resolve.
Interesting. Okay, we'll keep our eye out on CBDCs. Now, you mentioned that this conference here in Paris is all about institutions. What are institutional investors interested in right now?
I think absolutely a clear message from the regulators whether or not cryptos, many of them undefined in terms of security designations, are going to have a clear definition in the near future. Secondly is the fact that, like we said before, in addition to regulations, they would also like to know what part of the financial system schema, such as banks' charters, would allow whether or not a bank can engage into crypto scenes. In the US, for example, OCC is the regulator that defines rules for banks to be to engage in certain activities. They have 9 different bucket risk categories that allows banks to engage in certain activities. Crypto not being one of them today yet, and that I think needs further clarification. Similar to other Western countries over here, France and UK, if the FCA, the Fed, and also the European regulators can define clearly what they are, I think it's going to be very helpful.
Okay, well, asset classes that institutional investors are curious in within the crypto and DeFi space, is it projects? Is it companies that are involved in blockchain? Is it NFTs? What's piquing institutional interest right now?
That's a great question. Actually, I've been speaking with multiple private equity investors,
Yes.
Family offices, high net worth guys. I think one thing about institutions that as we can define is one category is the traditional finance institutions, which today can basically only engage in Bitcoin and maybe Ethereum due to the fact that some regulators have defined them as non-securities on the decentralized portion. However, some of the other tokens, not going to name them, may not have such definition, and for that reason, conservative financial institutions, may not want to engage that just so that they don't jeopardize their own licensing within the current operating environment.
VCs don't have to adhere to public securities laws, though, right?
They do not. As a matter of fact, they have already engaged in many investments in different tokens, having their own views as to how the token values, can be tied back to the actual usage and the cash flow from the projects. But at the same time, everyone, I think, to a certain degree, adopt the Amazon investment model, which is that 20 years ago, everyone thought that Amazon was losing money. By now, we all know Amazon is a viable model, very, very profitable. A lot of folks are basically looking at this model and basically predicting whether or not projects, especially the top ones, are going to have further adoptions, beyond what we can imagine today.
Amazon was, I remember correctly, in its early days, losing money on its book sales. Their strategy was to price their books as low as possible to bring in customers and then make money on higher margin sectors. Can that parallel be applied to the DeFi space today?
Great question. I have to think about the answer, but my first take is the fact that I've heard about multiple evaluation methods today.
Basically, some parts of DeFi are losing money, others are not, right?
Exactly. But I've heard about firms, especially tier 1 exchanges, are being valued at 5 times sales volume today, and a lot of the smaller tokens have been valued at 40x sales volume as the valuation that they carry today. So there is some method being used today. Obviously, investors make the call when they actually put hard money into what they believe. Yeah. But at the end of the day, I believe the traditional finance laws and gravities, by laws, I mean the actual economics valuation method, still applies.
Mm-hmm. I saw a lot of GameFi companies here at the conference. Is that a space you've watched for?
Absolutely. I mean, I think this space is too big, too huge to ignore at this point. I mean, there's definitely tokenomics within the GameFi world. And to us, DeFi governance tokens and GameFi NFTs are not that different. Some of them generate cash flow just like the other ones. But they're different in a way such that one is fungible, the other one being non-fungible. But technology itself can solve both problems very easily.
Yeah. What about the NFT space? A lot of people here selling NFTs.
Right. I think today a lot of folks are looking for the utility of NFT. Some of them have already gone way beyond a JPEG, already tying to a business model in a way such that, like I said before, being a non-fungible token allows a very unique use cases such as property rights, to be implemented properly using NFT technology, 1155 or 721.
So the space is moving away from just being collectibles, you're saying?
Absolutely. I think people are applying almost like a traditional, sometimes, if you think about the laws, on unique property rights, I think those are getting implemented in the NFT space very soon.
I think another trend I've noticed is the implementation of consumer finance products within the DeFi space or crypto space. So for example, a couple of companies I've talked to are issuing or in the process of issuing crypto credit cards, which is a completely brand new product. Right. Obviously, they have different collateralization requirements for their customers, but I'm just wondering how this is going to change people's attitude towards cryptos as a form of payment, as a form of currency, and whether or not that's going to affect adoption rates.
Absolutely. So I would say DeFi, the technology, are quite similar to 50 years ago, when credit card first came out. Credit card revolutionized the way we spend due to the fact that they're able to risk manage on different steps of the transaction, such that some parties are willing to take up the risk to provide the convenience of basically fronting the cash for the customers. DeFi, in a way, went way beyond that. Not only do you not have to wait for, like I said before, the overnight risk from different intermediary merchants, but rather right now you make everything into one transaction. You can immediately find out whether or not a customer is worthy enough to be given the so-called credit, and at the same time, being able to exactly transacting in the amounts that is needed to complete, the transfer and swapping of assets. Okay.
Another big theme I've been hearing from people here at the conference is the concept of interoperability between different protocols and projects. Is this something that you followed?
We have been following. Today on our own project, we are multiple chain, as people call it. But as a matter of fact, there are many bridging solutions, that will allow, for example, a Bitcoin to be used between Avalanche, let's say the Polygon, and Phantom, ecosystems. There are many ways to allow basically what people see as the same assets, even though they're implemented on different protocol, different layers, to be used across the board, such that values can be transferred more easily.
Mm-hmm. Okay. Well, I know you can't give investment advice, but I ask you this every time. DeFi protocols that you're watching for right now that have investment potential.
Right. Polygon is something that we've been looking at. As recently as probably a month ago. We've been watching Phantom, but one of the biggest marketer of Phantom, Andre, have recently publicly quit.
Tell us what Phantom does.
Phantom, is another layer one, also EVM compatible. They have a very good technology, especially on the speed of transfer and things like that. What we found is the fact that we, as a project, value on the fact that there's a deep ecosystem that allows, on our logo, composability of what we call the index strategies. What it means is that we want different parties, including financial managers, advisors, to create their own portfolio that allows different risk profile to be achieved. And Phantom, along with Avalanche, BNB, and Ethereum, provides those kind of deep ecosystem that allows basically everyone to play and compose with. But the other thing is that we also have to watch out for the consumer sentiment side. Today, I think Polygon has done probably a very good job, so we're very bullish on that.
Okay, excellent. Well, great insights as always. You're always one of the people who I talk to, and then it's like, okay, I have got 50 terms I haven't learned before. Time to do some Googling. But always great to talk to you. Very educational.
Thank you
so much, Michael.
As always.
Thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.